They told you volatility is danger, that it's chaos, that it's the enemy of order and the reason most traders lose. But what if that's not the truth? What if volatility isn't the problem, but the mirror? The mirror that reflects who you truly are under pressure. The market doesn't destroy you, it exposes you. Every spike, every crash, every violent move on the chart isn't a random act of the market gods. It's a revelation, a mirror reflecting your lack of internal architecture. Volatility only feels like the enemy because you never learned how to stand still inside a storm. In the world of trading psychology, volatility is the emotional amplifier. It magnifies whatever structure, or lack of it, lives within the trader. To an undisciplined mind, volatility looks like threat. To a structured mind, it looks like opportunity. The difference isn't in the candle, it's in the consciousness reading it. You see, most traders come into the market chasing movement. They want action, drama, confirmation. They don't realize that the market's chaos is neutral. It's they who are chaotic. They meet volatility with volatility. Fear meets movement, greed meets reaction, and the cycle repeats. But let's slow that down. When you enter a trade and volatility spikes against you, what actually happens? Your pulse rises, your breath shortens, your vision narrows. You're no longer reading data. You're defending ego. You're fighting ghosts that live inside your nervous system. The candles aren't red or green anymore. They're personal. And that's where the illusion begins. Because volatility isn't external, it's internal. The market doesn't shake. You do. The greatest traders in history didn't conquer volatility by predicting it. They transcended it by mastering their internal reaction. They didn't seek calm markets. They built calm structures. They didn't avoid risk. They reframed it. They realized that volatility was never the villain. Emotion was. Think about that. If volatility were the true enemy, then all traders would fail equally in volatile conditions. But that's not the case. Some thrive. Some build fortunes in the same chaos others curse. Why? Because they built a model that could stand within volatility, not outside it. When volatility spikes, the reactive trader seeks safety. The intentional trader seeks structure. One runs from the storm. The other studies its rhythm. And that rhythm is everything. Volatility has a pulse, a sequence, a cycle that mirrors probability. Every movement hides a pattern of energy release. Every expansion demands a contraction. Every impulse creates an echo. The untrained eye sees randomness. The intentional trader sees design. So let's make this real. Picture two traders watching the same year USD chart. Price spikes 50 pips in 1 minute. One panics. He closes in fear. The other smiles, not because he predicted it, but because he expected it. His model accounted for expansion. He wasn't caught off guard by movement. He was waiting for alignment. Volatility didn't betray him. It fulfilled him. Because he wasn't trading candles, he was trading conditions. Volatility in its raw form is energy. Energy without structure is chaos. But energy guided by structure becomes probability. That's where the transformation begins. Not in the chart, but in the mindset that reads it. So when traders call volatility the enemy, what they're really saying is, I have no structure for what I'm facing. They're revealing their internal architecture. Because if your structure is weak, every market movement feels personal. And when emotion becomes the lens, your model dies. Volatility kills models not because it's powerful, but because your emotions are ungoverned. This is the war you never see. The war between movement and meaning, between data and discipline, between your model and your mood. The undisciplined trader interprets volatility as punishment. The structured trader interprets it as communication. Volatility isn't against you, it's speaking to you. But if you're emotional, you can't hear its language. In Forex volatility trading, most retail traders misinterpret spikes as manipulation. They call it stop hunts, traps, or games. But the truth? The market is just clearing imbalance. It's breathing. And when you mistake breathing for betrayal, you suffocate under your own fear. To turn volatility into probability, you must first accept this truth. Volatility is not chaos. It's compressed intelligence. Every spike holds information about where energy is stored, where liquidity lies, and where psychology will break. If you can read that, you're not trading volatility. You're commanding it. Now, here's where you pause, because this is not a motivational speech. This is design. This is where we separate traders who chase movement from those who architect models. If this truth hits home, you're not just listening, you're evolving. Subscribe to Trading Rebels, where we don't trade and we design intention. Now back to the truth. Volatility is a mirror, and most traders hate what it shows. That's why they avoid it, fear it, or fight it. But avoidance is not mastery. You can't command what you refuse to study. To dominate volatility, you must first befriend it. You must become emotionally neutral to its presence. Because neutrality is your greatest weapon in volatile markets. When the market expands, your pulse shouldn't. When the candles explode, your mind should still be still. That stillness is structure. It's what allows you to see probability in movement instead of panic in motion. Without structure, volatility breeds emotion. With structure, volatility breeds opportunity. The truth is, volatility doesn't destroy traders. It exposes unstructured ones. It exposes your lack of risk framework. It exposes your dependency on certainty. It exposes the parts of you that still want to control what was never yours to command. That's the paradox. The moment you try to control volatility, it controls you. But the moment you surrender to structure, you regain control. You shift from predicting to commanding. From chaos to design, volatility is not a storm to survive. It's a rhythm to understand, and every rhythm has timing, tone, and sequence, like music. When you hear it wrong, it sounds like noise. When you hear it right, it becomes harmony. That harmony is probability. That's what the intentional trader hears. Not noise, not fear, not manipulation, but rhythm. And rhythm is structure in motion. So the next time you open your charts and see a wild spike, ask yourself, is this chaos? Or is this communication? Because if you can read its language, you've already won half the battle. You're not fighting volatility anymore. You're dancing with it. Volatility is not the enemy of probability. It's the environment that gives probability its meaning. Without movement, probability doesn't exist. Without uncertainty, your model has no purpose. Volatility gives your structure a battlefield, and only the structured survive the storm. Most traders run from volatility because they were taught to. They were conditioned to see movement as danger, spikes as traps, and uncertainty as risk. But what if volatility wasn't there to destroy you? What if it was there to redefine you? In the doctrine of intentional trading, perception determines probability. You don't trade the chart, you trade the meaning you've assigned to it. And until you reframe volatility, you'll always misread its message. Because volatility, by design, is neither enemy nor ally. It's neutral intelligence waiting for structure to give it voice. So let's begin with a truth. Volatility is not random. It's reactive. It moves in response to liquidity, imbalance, and order flow, three constants that never vanish from the market. It is not chaos. It is communication. But you cannot hear the language of volatility through the noise of fear. Reframing volatility begins with psychological recalibration, retraining your nervous system to interpret uncertainty as information. That's the first rebellion, refusing to label movement as threat. Because every time you call volatility danger, you program your mind to retreat from the very data that could make you consistent. And that's the tragedy of most traders. They confuse fear with intuition. They call their nervous collapse a gut feeling. They exit too early and call it discipline. They freeze and call it patience. But beneath every misinterpretation lies one truth. They've never reframed volatility. You can't master what you misinterpret. If volatility means chaos, then chaos will own you. If volatility means opportunity, then movement becomes your advantage. The meaning determines the mastery. This is where intentional traders separate themselves. They don't just see volatility, they assign purpose to it. To them, volatility is energy looking for structure. Every expansion, every squeeze, every erratic push is just energy escaping containment. And when you understand containment, you understand control. Volatility, then, becomes the blueprint of probability, not its opposite. Because the more energy the market releases, the more predictable its rhythm becomes. Think about that. Chaos is not the absence of pattern, it's the overload of it. You just haven't zoomed out enough to see the sequence. In Forex volatility trading, when liquidity pools are triggered, price expands, not because it's emotional, but because it's efficient. The market is clearing inefficiency. And the intentional trader studies this efficiency, not emotionally, but architecturally. He doesn't say the market is crazy today. He says energy is realigning to equilibrium. That language shift changes everything because words shape perception, and perception shapes action. You can't behave consistently if your language breeds chaos. That's why intentional traders build a vocabulary of order. They reframe their entire inner dialogue. When volatility hits, the reactive trader says, "This market is unpredictable." The intentional trader says, "This is volatility seeking equilibrium." One loses alignment, the other maintains structure, because volatility doesn't define you, your interpretation does. Now let's test this reframing in motion. Imagine you're watching GBP USD. Price shoots up violently, 100 pips in minutes. The old version of you panics. You call it manipulation. You exit. But the reframed version pauses. He knows volatility is data. He reads volume. He maps liquidity. He checks his model. He sees the spike as displacement, not deception. And that reframe, that single reinterpretation, keeps him in structure while others drown in emotion. Volatility is neutral, but neutrality only rewards those with internal symmetry. Your external environment will always mirror your internal order. So the real work of reframing volatility begins within. It's not just technical, it's philosophical. You cannot read volatility through panic and expect probability. You must read it through posture. That posture is your structural stance, the emotional alignment that lets you interpret chaos as cycle. This is where your trading psychology evolves. You stop reacting to the chart and start relating to it. You realize volatility isn't something to avoid, it's something to converse with. You stop saying, "The market is volatile today." You start saying, "Energy is expanding, probability is forming." And that reframe doesn't just change your trades, it changes your identity. Because when you stop fearing volatility, you stop fearing yourself. You stop fearing emotion, failure, uncertainty, the very things that kept you reactive. That's what we mean when we say commanding chaos. It's not about suppressing emotion, it's about structuring it. It's not about avoiding risk, it's about redefining it. Volatility becomes the training ground for your evolution, not the trigger for your regression. You cannot evolve in still waters. Structure is tested only when the storm arrives. Volatility is not your punishment, it's your practice. Every spike is a test of posture. Every expansion is a mirror of your discipline, and every pullback is a reminder that movement is cyclical, that nothing in the market stays chaotic forever. To command volatility, you must learn to hold paradox, to be still while everything moves, to be precise while everything changes, to be structured while everything expands. That's mastery, because structure doesn't remove chaos, it contains it. It gives shape to energy, and once energy has shape, it becomes probability. Here's the real reframe. Volatility is evidence of the market's order, not the absence of it. Every expansion is followed by contraction. Every impulse is followed by correction. Every imbalance seeks resolution. That's not chaos. That's design. And when you finally see that, volatility no longer frightens you. You start to crave it. Because volatility brings liquidity, and liquidity brings probability. Without volatility, the market is dead. So, why do you call life chaos? The truth is, you don't fear volatility. You fear your inability to stay still within it. You fear your lack of process, your emotional fragility, your dependency on certainty. But once your structure matures, volatility becomes fuel. Volatility isn't the market's heartbeat. It's yours. When you move erratically, it mirrors you. When you breathe in rhythm, it harmonizes with you. That's why intentional trading is not mechanical. It's spiritual. Because mastery over volatility is mastery over self. You don't conquer the market. You conquer the reactions that make you unstable within it. You conquer your impatience, your greed, your impulsivity. You conquer the false narratives that tell you chaos is against you. Every trader must go through this internal death, the death of fear disguised as strategy. Because every emotional strategy is still fear in costume. You cannot hide from volatility behind logic. It finds you. And when it does, it will strip you of pretense and force you to reveal structure or surrender. But surrender isn't weakness, it's wisdom. To surrender to structure is to allow yourself to see volatility as truth, not threat. So what does this mean practically? It means that when volatility expands, you slow down, not in speed, but in perception. You zoom out. You look for cycles, not candles. You identify context, not confirmation. You ask, where is this energy coming from? Where will it seek equilibrium? That question reframes your entire process. It removes panic and installs precision. It transforms trading from gambling to governance. Because now you're not reacting to volatility, you're interpreting it. Volatility becomes your language of data flow. It's not spikes and shadows anymore. It's expansion and compression. You read it like a dialect. You hear its tone. And soon, chaos becomes predictable, not because you can control it, but because you understand it. That's the power of reframing volatility. It changes how you see, and therefore how you behave. And when perception aligns with structure, performance follows. So remember, volatility is not your problem. It's your permission. It's the permission slip to grow into your next level of structure. Without it, you'd never evolve. Without it, you'd never prove your process. Without it, trading would remain theory. If you're still listening, that means you're not a casual observer. You're part of the rebellion. If this truth hits home, you're not just learning, you're transforming. Subscribe to Trading Rebels, where we don't teach reaction. We teach command, where chaos becomes our classroom and structure becomes our weapon. Volatility is not your enemy. It's your mirror, your mentor, your momentum. The only question left is, will you keep fearing it, or will you start framing it? Once you stop fighting volatility and start framing it, you begin to see something extraordinary. Structure inside chaos. You start to notice that volatility doesn't move randomly. It moves within boundaries. Boundaries that, when identified, form what we call probability zones. These are not magical lines drawn on charts. They are regions of expectation, structural areas where probability begins to outweigh emotion. They are the invisible walls of order that govern the apparent disorder of the market. And when you can see those zones, you no longer chase entries. You wait for the model to align with the mathematics of movement. Probability zones exist at the intersection of three truths: volatility, liquidity, and intent. Volatility defines the movement. Liquidity defines the motive. Intent defines the structure. The undisciplined trader trades movement. The intentional trader trades intent through movement. That's the difference between guessing and commanding. Every market expansion has its rhythm, its breathing pattern. When volatility compresses, energy accumulates. When it expands, that energy seeks resolution. Probability zones form at the edges of that expansion and contraction. They are where chaos collapses into pattern. You see, chaos is just order unrecognized. Every violent push has a preface. Every collapse has a structure. The question is whether your framework can perceive it. The mind without structure sees volatility as threat. The mind with structure sees probability as timing. Let's make this practical. Imagine price surging through a level. You call it a breakout. Most traders chase it, expecting continuation. But the intentional trader sees differently. He knows volatility rarely travels in straight lines. He knows expansion zones often birth contraction zones. He knows energy must rebalance, and that understanding allows him to map probability zones, areas where reversal, continuation, or exhaustion probabilities align with his model. It's not prediction, it's structure reading energy, and energy always obeys balance. When you design your framework around volatility behavior, not against it, the entire market becomes a language of cause and effect. You no longer say, this move is too fast. You say, this energy is unsustainable beyond this volatility boundary. That's not intuition. That's architectural foresight. Now let's talk architecture. A probability zone is a design of confluence, the meeting point of structural, temporal, and psychological alignment. It's where price, time, and emotion synchronize. When volatility pushes into these regions, probability spikes. Because you're no longer reacting to motion, you're intercepting rhythm. Every intentional trader builds his model to identify these zones, not to chase trades, but to position within structural logic. Because logic removes noise, and when noise disappears, confidence follows. This is why consistency is not emotional, it's environmental. You build environments of probability through repetitive observation. You start to notice that volatility behaves predictably around equilibrium, not in exact prices, but in zones of behavior. And that is what separates signal sellers from structure builders. You can't outsource awareness. You must build it by mapping movement into memory. Now pause for a moment. Think about the last volatile move you traded. Did you react because it moved fast or because it moved into your zone? If your entry was emotional, it was reaction. If your entry was structural, it was alignment. That's the entire difference between volatility and probability. Volatility moves. Probability decides where that movement becomes meaningful. Probability zones, therefore, are not a guess. They are evidence of equilibrium's return. You're not forecasting the future. You're recognizing the boundaries of balance. Every expansion ends where energy runs out. Every impulse concludes where inefficiency is filled. Every surge collapses where liquidity is satisfied. That's not magic. That's mechanical rhythm. But here's the deeper truth. Those zones are not just external. They are psychological, too. They represent the mental equilibrium between your structure and your fear. When you trade outside your probability zone, you're not just out of sync with the market, you're out of sync with yourself. A probability zone is not a line on MetaTrader. It's a mental posture. It's where your mind knows this is where the structure aligns with the storm. And that internal awareness is what transforms probability from theory into execution. Every time you trade outside your zone, volatility owns you. Every time you trade within it, you own volatility. Because inside your probability zone, chaos bends to context. This is the art of intentional probability. Not to predict, but to position. Not to react, but to recognize. Because when you position within probability, you become immune to surprise. And when you're immune to surprise, volatility becomes irrelevant. This is how professional traders operate. They don't react to charts. They read conditions. They don't fear volatility. They map it. They know that every high and low is a marker of energy displacement, and they design their zones accordingly. Let's translate that into structure. Volatility has boundaries of expectation, expansion limits, contraction thresholds, and mean zones. When volatility expands beyond its statistical range, probability shifts toward correction. When volatility compresses, probability shifts toward breakout. And the trader who can map that cycle doesn't need to predict. He simply prepares. Preparation breeds calm, and calm breeds clarity. That's the currency of the intentional trader. This is why most retail traders fail. They try to act during volatility instead of preparing before it. They enter after the market moves, emotionally chasing confirmation. They forget that probability is born from anticipation, not reaction. You must build your zones before volatility appears. That way, when chaos comes, you already have a structure waiting. That structure becomes your compass. Your defense against randomness, your anchor in uncertainty. Because volatility without preparation is fear. But volatility inside preparation is power. Now pause again. Ask yourself, do you have a map or are you wandering? Do you have a probability zone or are you guessing entry points based on impulse? Because in trading, the difference between fear and control is one word: structure. If this truth resonates, you're already seeing differently. If this feels like alignment, it's because you're remembering what you were built to do. Design, not react. If this truth hits home, you're not just watching a video, you're awakening a doctrine. Subscribe to Trading Rebels, where we turn market chaos into structural command, where volatility becomes our partner, not our punishment. Now let's go deeper. A probability zone is not a guarantee of profit. It's a guarantee of clarity. You're not building zones to win every trade. You're building zones to ensure that every trade you take is intentional. Because once intention rules your behavior, your probability increases. Not statistically, but structurally. Intent is the invisible variable most traders never quantify. They measure pips, but not posture. They calculate risk, but not readiness. And that's why volatility crushes them. Probability zones restore the hierarchy. Intention first, structure second, execution third. That's how volatility becomes predictable. Because predictability doesn't come from knowing. It comes from being aligned. When your internal state mirrors the external condition, there's no friction. You don't force trades, you allow them. You don't chase setups, you attract them. Because the market reflects your internal organization. That's the spiritual symmetry of intentional trading. Probability zones are not just coordinates on a chart. They are the manifestation of coherence between your design and the market's energy flow. They mark the places where your structure meets the universe halfway. That's why the intentional trader never panics inside a zone, because within that structure, everything has already been decided. He is not reacting, he is remembering what his design already foresaw. This is mastery, not controlling the market, but eliminating the need to. Because once your structure is strong, volatility becomes signal, not threat. The untrained trader says, the market is random. The structured trader says, the market is rhythmic. One speaks from confusion, the other from communion. And that communion, that alignment between volatility and probability, is what makes chaos commandable. Volatility doesn't destroy probability. It defines it. And once you see that, you'll stop fearing movement and start reading it. Because every motion hides meaning, and every expansion hides equilibrium waiting to be revealed. When you map that meaning, you no longer need to chase the market. The market reveals itself to you. That's the power of structure. That's the essence of the probability zone. So here's where it gets real. Up until now, we've been dissecting volatility like surgeons, understanding its anatomy, its triggers, its illusion of chaos. But in this segment, we shift from theory to power, from survival to command. This is where you harness volatility, not by resisting it, but by designing within it. See, volatility is not meant to be tamed, it's meant to be channeled. Think of it like electricity. Raw current can burn your house down, but when directed through structured wiring, it powers cities. That's exactly how volatility functions. It's raw market electricity. You can't control where it sparks next, but you can engineer the path it flows through. The mistake traders make is trying to suppress volatility, to wait until things are stable before executing. But stability is not where wealth is built. It's where mediocrity hides. The real money moves are birthed in the womb of volatility, when most traders freeze, panic, or overreact. That's when the intentional trader executes, not impulsively, but structurally. And to harness volatility, you must first internalize one truth. Structure is not a cage, it's a conduit. It's what converts chaos into coherence. Your trading plan, your model, your entry framework, they're not restrictions. They're the wiring system that channels energy. Without them, you'll get electrocuted. With them, you generate power. Now let's get practical for a moment. When volatility spikes, what actually happens on your chart? Liquidity pools activate. Stops get hunted. Emotional traders rush in. Algorithms expand spreads. It's war, and like any war, the undisciplined die first. But you're not here to survive it. You're here to use it. The market gives you bursts of movement, emotional imbalances, spikes of uncertainty, and within those bursts lie probability zones, displacement footprints, liquidity traps. Volatility doesn't distort your structure, it reveals it. It forces your system to show whether it's robust or decorative. When volatility hits, your reaction defines your rank. Do you flinch? Do you chase? Or do you observe? Allow the storm to expose the map beneath it and strike when the structure realigns. Here's the paradox. Volatility doesn't break traders. It exposes the ones who were already broken. Because the market doesn't destroy structure, it simply reveals whether you had one. Let's run a quick mental experiment. Imagine two traders standing in front of the same spike. One sees chaos, the other sees context. The spike hits, candles move violently, liquidity sweeps, everyone panics, but the structured trader doesn't flinch. He knows that volatility is nothing but a magnifying glass. It magnifies imbalance, exaggerates displacement, and clarifies where the market's next order flow will emerge. He doesn't guess. He waits for structure to reform after impact, and then rides the momentum left by the emotional ones. That's volatility harnessed. And this is where the word command takes shape. To command doesn't mean to predict. It means to position intentionally within the probabilities that volatility unlocks. Now, here's something most never realize. Volatility is not external. It's psychological. It exists in the market because it exists in the trader. It mirrors uncertainty, fear, and greed. When the crowd reacts to volatility, they're reacting to their own inner chaos projected onto price. You can't harness external volatility until you master your internal volatility. That's where the discipline of breathing through uncertainty comes in. When the market spikes, your body reacts before your mind does. Heart rate increases, cortisol floods the system, tunnel vision sets in. But structure interrupts that pattern. When you've rehearsed your model so deeply that it becomes reflex, volatility no longer destabilizes you, it activates you. That's what I call structured aggression. You're not timid in volatility, you're precise. You don't hesitate, but neither do you rush. You know when your conditions align, and when they do, you strike with certainty. Not emotional certainty, but statistical certainty. Volatility becomes your amplifier, not your adversary. Now imagine the difference between the impulsive trader and the intentional trader in the same volatile condition. One gets triggered, the other gets triggered into alignment. One reacts to chaos, the other reads it. One sees threat, the other sees fuel. That's the difference between volatility as an enemy and volatility as an ally. The intentional trader doesn't eliminate chaos, he absorbs it into design. This is the real edge, not prediction, not indicators, but the ability to stand still in volatility long enough to see its structure. Because the market always leaves a structure, even in its most violent state. Every displacement leaves footprints, every imbalance resolves, and every breakout obeys a pattern of exhaustion. Now let's get interactive for a second. Think about the last time volatility made you freeze or doubt your system. What was the trigger? Was it the spike itself, or the narrative your mind built around it? You see, we often don't fear volatility. We fear uncertainty without structure. When your system lacks clear definitions of behavior, every spike becomes personal. But when you've predefined your volatility thresholds, your invalidation zones, your volatility filters, you're no longer reacting, you're observing. Volatility no longer catches you off guard. It activates your structure. That's why one of the most powerful design principles in trading is the Volatility Harness protocol. It's where you design scenarios that allow volatility to work in your favor. You don't trade against the spike. You wait for it to clean liquidity, reset imbalance, and create displacement. Then you enter when structure reforms within your predefined probability window. That's what separates the gambler from the architect. The gambler reacts to the spike. The architect waits for the aftermath. And right here, Rebels, is your mid-moment of reflection. If you've been trading reactively, this is your point of conversion. This is your invitation to stop chasing volatility and start harnessing it through structure. Remember, volatility is not your threat. It's your test. It asks one question. Do you trust your structure more than your emotions? That's the question that defines your rank in this market. And if this message is hitting you right now, pause and share this with another trader who's drowning in volatility. Let them know structure is not about control. It's about creative command. That's what we do here. That's what Trading Rebels stands for. We don't chase, we design. Now let's bring this back home with one crucial principle. Volatility rewards repetition. Every time you survive a volatile event through structure, your nervous system becomes more resilient. You stop perceiving volatility as danger. You start perceiving it as data. And that's the turning point. Because once volatility becomes data, fear dissolves. You start to see beyond the candle spikes and noise. You start seeing rhythm, tempo, recurrence. Volatility becomes a pulse you can read, anticipate, and synchronize with. That's what I call alignment with the market's nervous system. You're not fighting it anymore. You're breathing with it. So here's your task after this episode. Study volatility, not as a price event, but as a psychological mirror. Watch how it manipulates behavior. Notice how price moves after liquidity spikes. Build your process not to avoid volatility, but to absorb it into design. Because once you can harness volatility, you're no longer a victim of movement. You're the architect of momentum. And in that moment, the market no longer intimidates you. It respects you. So to every rebel listening, volatility is not your enemy. It's your forge. It's where steel is tempered and weakness is burned out. It's where you stop being a trader and start being a creator. You're not here to guess what the market will do next. You're here to structure what you will do next when it does what it always does: oscillate, expand, and contract. That's volatility's rhythm. And your job is not to predict it, but to dance within it with structural grace. That's the art of harnessing chaos. That's the power of intentional trading. And as always, this is Trading Rebels, where we don't just talk charts, we talk consciousness, where chaos becomes order and volatility becomes fuel for creation. If this message resonated, hit that like button, subscribe, and share this truth with your circle. The market doesn't reward noise, it rewards structure. And in this tribe, structure is sacred, because at the end of every volatile wave, only one thing matters: Did you react or did you design? Now, breathe that in. We move to the next layer, structured aggression, the art of striking within volatility without losing control. You're listening to Trading Rebels, where structure commands chaos. Now we arrive at the final transformation, structured aggression. This is where volatility stops being an opponent and becomes an ally. It's the junction where structure meets confidence, where control meets decisiveness, and where the trader transitions from defensive survival to offensive command. Structured aggression isn't about being aggressive in emotion. It's about being aggressive in precision. It's when every move is deliberate, every entry premeditated, and every exit built on logic, not adrenaline. See, the untrained trader thinks aggression is about taking more trades, increasing lot sizes, or forcing entries. But real aggression is about the intensity of intentionality. It's your ability to move with power without breaking form. Just like a martial artist doesn't throw punches wildly, he strikes with posture, timing, and focus. That's structured aggression, violence contained within design. And this is where most traders fail, because they think control and aggression can't coexist. They think being disciplined means being passive, but discipline without power is hesitation. Power without structure is destruction. True mastery exists between them, where your aggression is harnessed by your structure. Think of it this way. Volatility gives you opportunity, structure gives you direction, and aggression gives you execution. Without all three, your system is incomplete. Let's make this tangible. When volatility expands, your model provides the framework, your zones, your confirmations, your timing. But what separates you from the reactive trader is when you move. Structured aggression is not about speed, it's about timing precision. It's when the market screams chaos, but your plan whispers now. That's the difference between movement and moment. Anyone can move, but only those with structure seize the moment. Aggression must always be timed by design. You don't force the market to give you entries. You wait for the market to align with your structure, and when it does, you strike without hesitation. Because hesitation in a structured setup is betrayal, not of the market, but of your own preparation. Structured aggression is therefore the manifestation of trust. Trust in your structure, trust in your model, trust in your data. Let's break that down. Aggression without trust becomes gambling. Trust without aggression becomes paralysis. But trust expressed through aggression, that's command. When you execute with structured aggression, you no longer fear being wrong because you know your aggression isn't emotional, it's statistical. You're acting from probability, not possibility. And that's the line that separates the rebel from the crowd. Let's get introspective here. How many times have you seen a clear setup, felt the alignment, but froze, waiting for more confirmation, only to watch the move unfold without you? That's the absence of structured aggression. You had structure, but no conviction. Or maybe the opposite. You saw a volatile move, felt the FOMO, jumped in without confirmation, and got stopped out. That's aggression without structure. Both are symptoms of the same disease, disconnection between belief and behavior. Structured aggression is the cure. It's when your belief in your model has been proven through repetition, through data, through time. So when the moment comes, you don't ask if you should strike, you know you should. Because your structure has already done the thinking for you. You're not reacting, you're executing a pre-decided plan. That's why I always say, the real battle is not between trader and market. It's between structure and impulse. And structured aggression is how structure wins. You've heard the saying, fortune favors the bold. But I would reframe that. Fortune favors the structuredly bold. Because boldness without process is recklessness. But process without boldness is stagnation. Aggression must always be an output of structure, not an escape from it. Let me take you deeper. Every time you act within structure, you reinforce a neurological loop. Your brain learns that uncertainty is not a threat. It's a field of probability. Over time, this reprogramming hardwires confidence. So when volatility spikes, your instinct isn't panic, it's focus. You lean in, not to gamble, but to command. Structured aggression, then, is not a mindset, it's a muscle. You build it through repetition, you strengthen it through intentional execution, and you refine it through reflection. Every trade becomes a rep. Every loss becomes feedback. Every win becomes proof. You're training your nervous system to equate volatility with opportunity, not danger. Now, Rebels, I want you to pause and reflect on this. What if the reason your trading feels inconsistent isn't because your system is flawed, but because your aggression is unstructured? You have data, you have knowledge, but your execution isn't synchronized with your belief. You know what to do, but you hesitate when it's time to do it, or you overreact when you shouldn't. That's the behavioral gap between knowledge and embodiment, and the bridge across that gap is structured aggression. In every volatile environment, your aggression should be directional, not emotional. It should move with volatility, not against it. You're not fighting the wave, you're surfing it. You understand where liquidity sits. You understand how price expands and contracts. You know the emotional traders will exit and where institutions will re-enter. So when the chaos hits, you don't panic, you position. This is the difference between being caught in movement and commanding momentum. Now here's your call to reflection and your call to action. Right now, if you feel volatility has been shaking your confidence, don't double down on fear. Double down on structure. Strengthen your process. Refine your model, because only structure can hold aggression in alignment. And when you've built that alignment, unleash it without apology. Aggression becomes your force of creation. It's the fire that forges your consistency. Because in truth, structured aggression is not aggression at all. It's expression. It's the visible manifestation of your invisible discipline. The market rewards the trader who has earned the right to strike, and you earn that right through structure, through process, through repetition, through proof. When volatility rises, your aggression rises too. But in rhythm, not in panic. You're not overtrading, you're aligning. You're not reacting, you're reinforcing. Every move you make is an echo of design. And that, Rebels, is when you become untouchable. Because the market can manipulate emotions, but it can't manipulate structure. It can fake direction, but it can't fake discipline. And when your aggression is built on discipline, no volatility can intimidate you. So as you move forward, carry this mindset. I don't chase opportunity. I command it. My aggression is structured. My design is deliberate. My results are inevitable. That's the creed of the intentional trader. That's the DNA of a trading rebel. You are not at war with volatility. You are wielding it. You are not reacting to chaos. You are authoring through it. Structured aggression is your final evolution. It's the moment where your structure becomes self-aware, where every movement is an extension of design. When others panic, you execute. When others freeze, you adapt. When others overtrade, you wait. And when the market aligns, you strike surgically, decisively, intentionally. That's command. That's discipline. That's artistry. Now let's close this journey with clarity. Volatility was never your enemy. Ignorance was. Unstructured aggression was your downfall. But now, equipped with design, patience, and precision, you can step into the arena as an architect, not a gambler. Volatility will still test you. It will still try to shake your convictions. But the difference is, you'll no longer flinch, because you'll know that chaos is just creation in disguise. And probability is simply chaos measured through structure. So the next time volatility hits, smile. It's not your signal to panic. It's your signal to perform. Because rebels don't wait for calm waters. We build structure that surfs the storm. And that's the doctrine of this movement, turning volatility into probability. Commanding chaos. If this episode spoke to your trading spirit, pause now, like the intentional trader you're becoming, and hit that subscribe button. Not for noise, not for hype, but for design, for structure, for philosophy. Because in this tribe, we build consistent traders, one intentional decision at a time. And remember this truth, rebels, the market doesn't reward emotion, it rewards structure under pressure. And pressure is what we command. Stay intentional, stay structured, stay rebellious. You've just completed the cycle, from volatility to probability, from chaos to command. And as always, welcome to Trading Rebels, where structure breathes through chaos and volatility bends to design.